Hey, this is Matt from InvestiQuant. Today is Monday, April 13th, 2020. And Thursday, the markets finished strong for the week, closing up at a 20-day closing high. And I want to look at a quick pattern based on that and show you just a couple differences that really stand out on the pattern when you look at it in a different environment. So the way I'm going to set up this pattern is looking at the ES. The setup is an intraday open, so entering at 9:30 a.m. Eastern Time. For the trade type, I'm going to use fade because this setup typically does better with a fade as opposed to a simple long or short bias. For the opening filters, I'm going to do open in prior day range. It looks like we're going to open in prior day range. I have no idea what direction it's going to be. Currently we're down, but we are lifting coming into the open. This pattern happens to do well in either direction typically, so it works for this instance that it doesn't really matter which direction we're opening, but I do have us opening within the prior day range. And the price pattern we're going to be looking at is closing at a 20-day high. So I'm selecting day after 20-day high close, and I'm going to hit view results. If you look at this, this is entering as a fade, so trading in the opposite direction of the prior day close when opening in range after a 20-day high close. And the equity curve fairly steady to the upside on a bunch of samples. Win rate about 56%. Not huge winners or losers on any of these, but what I really want to show you is just the difference for this pattern for fading in a more bullish environment versus a bearish environment. So in a bullish environment, I'm just going to put this over the 200 and run it again, and you can see it looks fairly similar, maybe a little bit stronger. 56% win rate, still a good amount of samples here, and equity curve just marching higher. And I want to compare that to when we are below the 200-day moving average like we are today. So when you put it below a 200-day moving average, you'll see that the bias kind of falls apart. The win rate is down to 44%. When it's above the 200, it was at 56%. So this is typically a good pattern, and you can build some other patterns around this, like gap fade type strategies around this in more bullish environments. But in the bearish market, this one just doesn't hold up as well. So this might be a go-to pattern for some of you guys that you may want to think about re-examining in a more bearish environment. So hope you found that interesting. Good luck today, and we'll see you next time.